Hey Ian, ready for another edition of the Iancast?
Oh, for sure. How are you, Paul?
Good. How are you doing?
Doing great, thank you.
I got my new USA hoodie on.
Yeah,
Um,
I
uh,
like it.
Thanks,
I
man.
thought it. I thought it would.
We're going to do our usual thing. We're going to do the stock market and do a lot of news on Tesla. So I'm going to spend some time on Tesla today. Do Bitcoin and a little bit on cannabis. We're probably going to go a little bit long because we've got a lot to hash out. And I think still people, the vast majority of people, including a lot of folks at our parent company, Banyan Hill, and I just want to say we are separate from them. We are bold profits. We are part of them, but they're separate. And so we just want to make it clear. I know there's a lot of crazy bearish people at Banyan Hill, and we are not one of them. We are bullish, optimistic, positive. And those folks just want to make it clear, have their own teams. They are separate from us. They belong to the parent company, but we get a lot of tweets. I get a lot of tweets. I don't know if you do, asking me to explain why so and so is bearish, why so and so doesn't like some XYZ stock. And we just want to make it clear that those folks have their own teams. They are separate from us. We have nothing to do with them. And they are entitled to their views and their judgments and their opinions. And we have ours that are separate. However, I feel, Ian, it is worthwhile for us to get into what is increasingly a massive divide between, I don't know what to call it, new generation investors versus old generation investors, old school investors versus new school investors, America 1.0 versus America 2.0, new versus old. You can come up with a lot of different ways. However, there is this divergence, and you can see it pretty much every day, especially with like, yeah, I mean, they're definitely sensationalized websites today. All of them are Yahoo Finance, MarketWatch,
Right.
but you see it there, and and it's like coming out more and more into the fore.
Yeah. So definitely, as usual, a lot of negative headlines. Fear sells, so it's a good way to get clicks. But with the divide that you were talking about, I think the people who are pessimistic are the ones that are investing in the stocks that are being disrupted. And the optimistic people, like bold profits, are the ones that are investing in the stocks that are disrupting those older companies. So that goes kind of hand in hand with the America 1.0 versus American 2.0 divide, in my opinion.
Yeah, and for sure, when we look at the way we look at the world, I mean, our readers in Profits Unlimited and across their services, I mean, their stock portfolios have been booming since March 23rd, which is I mean, since the Nasdaq make a new high, I think it's
Right.
pretty fair to say that that was the bottom. And we can see any number of other indicators as well that suggest that the bottom is in. And whether it be with respect to the virus or anything else, is any number of any signs. However, there's like definitely though. Like I saw something like yesterday about this famed investor Jeremy Grantham talking about taking stock exposure down to zero. And
Yeah.
I've seen people talking about taking it to less than zero. In other words, they're suggesting that you go short the market.
Right.
Yeah.
Yeah. I mean, you can look at a long-term chart of the stock market over time and see that you're rarely going to win by doing that. I mean, if you're a long-term investor, but even if you're a short-term investor, there's so many great companies out there that are really disrupting the old. They're growing extremely fast, and there's not a lot of them. So all the money that's being poured into the disruptive companies doesn't have a lot of places to go, and therefore the ones that are out there in the public market get bid up more. And then you hear, all these opinions about how it's irrational and they're overvalued and things like that. Well, there's not really many other places for that money seeking disruptive companies to go at this point.
Yeah, I mean, it's really like in a way that the folks that are sort of railing against this market are experts in a previous version of the world, Ian.
Right.
They're experts in a previous version of the world that was passing by, and now I believe we can call it's passed by.
Yeah, agreed. Yeah, that's why. I mean, even if you look at the S&P 500 versus the Dow versus the Nasdaq is just blowing the other two away over the past few years because we've had revolutions like Internet of Things and cloud software boom. And next up, I think, is blockchain. I think we're going to see a lot of these companies that have to do with fintech and blockchain come public. And of course, the crypto market's going to benefit from that too.
Yeah, well, I mean, we have this portfolio, which I acronym called STUF, which I put out there, which is our way of trying to get everyone to subscribe to our Bull Profits free e-letter. STUF is Spotify, Tesla, Uber, and Facebook. Now, I haven't checked this morning, but I think the last time I checked, so that STUF portfolio, Ian, which is, was put out there as the millennial portfolio.
Yep.
Which I put out there, and you can get a free report. And we'll put a link down there if you want to get a copy of the free report. Spotify was up 14% yesterday.
Yeah.
Just by itself. Yeah.
I mean, that just made a new all-time high and then has not gone down for like a minute since that.
Right.
So that stock is going crazy right now.
And Spotify, is still. I saw a tweet from a guy yesterday talking about how, he was sitting with his grandfather, and his grandfather didn't know that Spotify existed. And so he was like, wow, this is like an entire library of music that is there on demand. And it's amazing that you and I take Spotify for granted. I've been using Spotify for 6 years now, something like that, and had access to it. However, for many people, they're just being introduced to Spotify, and this idea that the world's catalog of music is available today, actually by voice search. Their voice search is okay. It's not great. It's decent, but you can just type it in and just listen to any song, pretty much from almost any era, and increasingly from any country. And now, really, that's extending to podcasts as well.
Exactly. Yeah. They, I like they're easy to use too. And it's not, I don't know, I've used other music streaming services, but Spotify is by far the easiest to use. And I don't know, I just like it more than others.
Yeah.
So I understand, people love it.
Yeah. It's the same thing in that STUF portfolio, which is very much a new versus old, because, these are, for everyone's full disclosure, are in the Profits Unlimited portfolio. And if you want to, know what Profits Unlimited is and get into a little bit of the details of this America 1.0 versus America 2.0, this divide. You want to see a presentation that I put out on this. I believe it's an amazing presentation because it really lays out what I believe the future is going to be. It's going to unfold. Well, click on the strong hands above, and that's going to take you to my America 2.0 presentation. Comes with a report on what I believe is an amazing America 2.0 company that I believe is going to dominate the making of everything in the United States and then around the world as well. And then also a list of 100 companies that are America 1.0. And that, as I say, the destination for these companies is certain, which is zero. Only the speed is unknown. So click on those strong hands above. And then the other thing that we've been seeing is as well, which is benefits, America 1.0 companies as well, which is a cyclical upturn that is global. And, we have talked about shipping when oil was at a negative price. We saw, a trade developing in shipping that was sort of global. And we've seen that shipping rates now are starting to go up very rapidly.
Right. Yeah. So there is like an index. There's also kind of like a stock. I mean, you can buy and sell shares of it. It's called, the ticker is BDRY, BDRY. So that's kind of measures future shipping rates. So it's what is expected to happen with shipping rates. And it's just gone up in a straight line the past couple of weeks. It's done really well. So that's really good news for shipping companies because obviously if the shipping rates go up, they're making more money. So BDRY is kind of a way to foresee what's going to happen with the shipping stocks. And that's the most cyclical kind of industry in the world. I mean, if shipping is up, if demand is up for products, for inventories, for raw materials, really anything that gets shipped around the world in bulk, that's great for the global economy. And it is really good for these shipping stocks. And during the lockdowns, obviously, these ships had really nothing to do because, ports were closed, a bunch of factories were closed, and storage places were closed. So they didn't really have anything to do. They weren't making any money, and the stocks went down almost to zero. So we actually recommended a few of these in our $10 million portfolio, and we kind of use BDRY as a proxy for that. So after BDRY has rallied like this, it's going to be great for these shipping companies too.
Yeah, absolutely. And it plays into what we said, which is that there is going to be a global cyclical massive upturn. The United States is going to lead that. And it relates to the fact that in modern times, we've never had a global shutdown of trade, global shutdown of economic
Yeah.
activity, where there wasn't mass extinction of some kind. Because
Right.
certainly in a different time, there's no possible way we could all really sit at home. I mean, today we can, and because there was enough inventory in the pipe of the critical goods that we needed, minus things like protective gear that was needed uh, for the actual mitigation of the virus for frontline workers, et cetera. However, in terms of food, other things, there was enough within the pipe. And what that has done, Ian, is actually solve something that has truthfully been an issue for something like 18 years, which is that we've had excess inventory in
Right.
any number of industries. And so as a result of that, we have never been able to actually get to sufficient capacity utilization to have big growth numbers for GDP and for economic growth. And today, as we have been sitting around just simply consuming inventory without replacing it, there's a three-part scenario that I believe is going to unfold that benefits shipping and generally all sort of making of things, including manufacturing, which is why we're also very positive on the industrials, which is that, well, we're going to actually consume things at a faster rate as we come out of the home for any number of items. Second, we have to obviously make stuff for that. And then both at a business level and a personal level, everybody is going to start to store a little bit more, which is a reversal of what we have been doing for nearly 30 years, which is this just-in-time inventory and then also the globalization of things where now people it's like, hey, I think there are any number of goods that we want to produce more local, and then we need to keep more inventory on hand because really the world is always certain, always was uncertain. We just needed to be reminded in very dramatic fashion.
Exactly. Yeah. So like you said, these places, all these warehouses have run, pretty lower, way lower than they have been in any recent time in inventory. And these shipping stocks really, these shipping companies really have their work cut out for them because they're going to have to deliver so much. There's so much demand. And in the shipping industry, they've been getting rid of ships. I mean, they've been breaking them down and selling the parts, really. There hasn't been much shipbuilding activity, so there's fewer ships to do more work. So that's going to push shipping prices up too because there's not as many ships. So that's another thing really, really, really positive for these stocks and also for the global economy because like you said, it's going to speed up even faster than it was before. And of course, that's going to help GDP. We've already seen a huge increase in retail sales. I mean, 17% growth in May. So that's really, I think that's going to continue. We're going to continue to see people go out and spend money.
Last thing on the stock market and this divergence, why we are positive, why we think it's completely appropriate for stock prices to be rising, and we expect it to continue, is also the data coming out on housing in the United States, which is I put up 2 in our Slack channel, which is that mortgage applications rocketing higher.
Yep.
Single family housing permits rocketing higher. And then another story, which is that 42% of all the bids for housing during the pandemic were in a competitive bidding situation. In other words, a bidding.
Yep.
In other words, there is so much demand relative to inventory that people felt while locked down to actually go and outbid each other.
Yeah, for something as big as a house, which is like the most expensive thing people buy in their whole life.
That's right.
Saying something for sure.
Yeah, it also tells you that the underpinnings of this economy, while the previous generation investors are seeing disaster, people are looking forward, are seeing that there is strong demand that is already in place, is going to get stronger, and is going to get significantly stronger as a result of having gone through what we went through, that in some ways is actually going to solve some of the issues that have been lingering for some time. And in the United States, there's also the additional aspect of an infrastructure bill that will be in the trillions. We haven't spent that kind of money. And so, this is a Lollapalooza effect that the markets get more than any single strategist and even the smartest person in the world is rarely as smart as the combined sort of intelligence that is represented by the stock market. And we would tell you the stock market is right, and all the people that are sensationalizing all of this stuff are wrong.
Exactly. Yep.
All right.
Agreed. 100%.
So we've done the stock market, and hey, if you like what we're saying or hate it, well, let us know what you think below. You can also follow us on Twitter. Ian, you go first.
Yeah, so I'm at Ian Dyer Guru.
And I am at Mampilly Guru, and we tell you to subscribe to the YouTube channel, give us a thumbs up, or if you think we suck, you can give us a thumbs down as well, I suppose. All right, Ian. So we talked before getting on about Tesla. A lot of stuff going on with Tesla.
Right. Yeah. So one of the things is they've recently said that they are thinking about putting a factory in Austin, Texas, which would be a huge development because they have so many products coming out. They've got the Model Y, which just came out. They've got the Cybertruck, which they're going to start making soon. And they've got the Semi, which they're going to start making soon, especially now that Nikola is out with their hydrogen semi-truck. So they're kind of competing with them for alternative energy, big, trucks. And so, they really do need more manufacturing capacity to build this because right now they're really only mass producing the Model 3. And they've got 3 factories that are dedicated to that and also somewhat to the Model Y, but they do absolutely need more factory space. And that's a sign that demand for their products is really strong too. So of course the stock just hit 1,000. And as we just said, the stock market is, a very good way of predicting things. And we don't think that Tesla is a mistake with that. We think that Tesla really does have the potential to see incredible growth, that it is accurate, that they are valued as the most, the highest priced or the most valuable, quote unquote, car company in the world. Even though they're not really a car company, they're more like an energy storage, automation, solar company. So it's all kinds of things wrapped into one company.
Yeah, I mean, I want to put out, and people can go back and look at this video. I think I said it's a combination of being a utility company, a mobility company. So they could take market cap from the utilities in that space because
Right.
of the solar business. In terms of them being a battery business, they also then take market cap from the Exxon Mobils and that energy part of our economy. And then they have an automobile business that is about to turn into a mobility business, because the one thing that's going to happen once the Tesla Semi is into the wild and the Cybertruck is now you have the first 2 forms of transportation, human transportation, that have some capability of autonomy. The Semi will have all the learnings from the Model 3 and Model X and Model S, all the, and that's now hundreds of thousands of cars around the world. And there was a really interesting presentation by, I believe, the chief engineer at Tesla talking about their approach to autopilot versus everybody else, which is completely unique. And as they say, it's like Waymo and people like that, they're pursuing a very, in the judgment of the Tesla engineer, a very non-scalable way of self-driving or autonomy, which is that they're trying to get highly defined maps where everything has to be right to like the last centimeter. And
Right.
what Tesla is doing is actually relying on computer imaging and is developing situational sort of awareness, situational intelligence, so that the same situation, if the driver is in, you can actually download that to everywhere around the world and it would apply, versus the other way, which is not scalable by country. If you have to map every last centimeter down to the last 0.1 millimeter accuracy, well, you're gonna have to do that country by country, versus looking at, say, hey, driver behavior based on this situation, based on these variants of the situation, these are the most likely outcomes. And then you're building ultimately an artificial intelligence engine really around the way people react to various situations while being in a car. And now you can put that, and it's highly scalable globally.
Exactly. And, they're growing that part of their business just by selling cars because they get that data from their cars whenever people drive them. So that kind of it's just an added benefit of someone getting a Tesla car, especially with the new ones with the higher tech sensors.
Well, I put up a tweet on, where the trucking business is going to be, I think by 2027. This was taken from a McKinsey study. So today there's pilot programs around the states where some number of trucks have sort of an add-on of autonomy that's there using cameras, LIDAR, and various and sensors, et cetera. These are all trial programs. I believe there's been you can go look at different states. The next step is where there would be a platooning where one driver is sort of like controlling multiple trucks. And then the next one is where trucks get dropped off, say at truck stops, and then somebody drives it at a local basis, and then full autonomy. And the time frame for this laid out in this McKinsey study is by 2027. And I believe that we're going to get fairly close to that time frame. And to tell that to people that that's what's coming in 2020, 7 years is really not that far out.
Yeah, exactly.
Yeah, I mean, we could have self-driving trucks in 7 years that are fully autonomous.
Yeah, I mean, Tesla already has, in their newer models, you can get autopilot, which is basically self-driving. You still obviously have to be aware, but it's by far the most advanced thing that we have in a commercial product, especially for the price of a Tesla, which is, dropping pretty quick. It's not really that much more than a comparable gas engine car.
Yeah, 100%. So the Tesla Semi would be a semi truck that has autopilot capability. We'll have some for sure.
Yeah, everything they're putting out now is, has that autopilot feature.
Right. So you'll now have a truck that's capable of autonomy that is out there, that is available, and that is just going to push all of this forward. So we have had we have followed Kathy Wood of ARK Invest. We think Kathy does amazing work. And we've told you that we believe that Tesla could go to $3,000 or $4,000 and potentially even more because it does play in so many different parts of the economy that today are worth trillions of dollars.
Exactly. Yeah, for sure. That's why they're valued so highly right now, because they're really taking parts of those market shares. And you never know that by looking at the headlines that compare them to like Ford and GM and companies like that, because they're not at all like that. They're something completely different. They're more of a tech company, and kind of three tech companies in one, with solar, energy storage, and automation.
Right. Yeah, I mean, Tesla is next generation, and pretty much everything else other than Uber is current generation. GM, Ford. It seems unlikely that these companies are going to make it into the new world. All right, Ian, we're still BOP, bullish, optimistic, positive on Tesla. Which one should we do next? Let's do Bitcoin.
Yeah, sounds good.
Let's do Bitcoin. So Bitcoin's been really up and down. I mean, I think it's had a top of 10,400 pretty recently. That seems to be the bid and ask, I guess, for the big blocks, or unless whoever the whales are that's trying to keep this price down. However, we've seen some amazing stats. I mean, the one that I just showed you, which is the number of Bitcoin sitting at dormant addresses for the last 5 years, is in excess of 15 million Bitcoin. And there's only 18.5 million mined in total. So there's only loose Bitcoin of 3.5 million-ish that's out there.
Yeah, exactly. So, of course, scarcity comes into play with that. And with the halving, there's going to be, if that trend continues, which I really do believe it will, there's going to be less Bitcoin out there for the whales to buy. And they're already obviously hoarding Bitcoin just based on that stat that you just said. And there's going to be less to hoard. So, even as retail, like regular investors keep buying Bitcoin, I saw that the amount of addresses with 1/10 of a Bitcoin or more just reached a new all-time high. It's almost 3.1 million addresses with that. So that's, millions of Bitcoin just in those, in everyday investors. So whales, the institutions that are buying a ton of Bitcoin are really sucking up most of the supply, but you've got retail investors too that are really, really buying Bitcoin at a rate that we've never seen, considering, it's $10,000 of Bitcoin. People are putting at least $1,000 in to 3 million different addresses.
Well, I mean, the two of the biggest whales are the Cash App and Coinbase, which represent. Coinbase's investors might have a little bit more money, but the Cash App is definitely a very. I think it's been downloaded, I don't know, at least 30 or 40 million times, and that's definitely a regular person app.
Yeah, for sure.
And they are sucking up as much as 50% of all the mined Bitcoin that's out there.
Yeah, and then there's Grayscale also, which is buying a ton of Bitcoin. They're seeing highest demand of all time. They manage money for, bigger institutions, wealthier clients. But so again, both ends of the spectrum are seeing huge, huge demand for Bitcoin. And the supply, of course, was cut in half last month. Newly mined Bitcoin is half of what it used to be. So less supply and more demand on both fronts.
And just to let people know, we actually have two cryptos in the Profits Unlimited account using stock market trackers. I don't want to give them out. I think I want to keep that for our readers. And let's just quickly go through as well, some of the things you've been messaging me about, about some of the, we've seen altcoins really start to catch like a serious bid. Like you've been telling me some huge moves in some of these coins.
Yeah. For sure, yeah. And so like over the past month, I think Bitcoin is flat, maybe down a couple percent. But I was just looking at, the top 50 coins by market cap. And a lot of those coins, the smaller ones, below Bitcoin and Ethereum and some of the other bigger ones are up like at least 20%. I'm sure I saw at least 10 or 15 coins that have really rallied over the past month in that top 50 list. So when altcoins are strong, it's kind of like when small caps rally in the stock market. And that's great news because people are willing to buy those smaller, riskier companies, or in this case, coins. And that demand will inevitably flow into Bitcoin at some point as people make more money in the smaller ones. So demand picking up there is a very good sign.
Yeah, 100% agreed. If there's money moving into that level and they're willing to bid it up 30, 50, 100%, it tells you there's more demand than supply. And when the money starts to push into the bigger ones, Bitcoin, Ethereum, Ripple, all the big cryptos, you're going to see an explosive move. And as you might know, if you watch the Incast, we're anticipating a Bitcoin price of 50,000 by year end, which people, I know they're going to say, Paul, you guys are crazy, but hey, that's they said we were crazy when we said Tesla would go to 1,000. So we don't get too many people writing us about that anymore. But we think that Bitcoin does 50,000, and we've looked at that stock to flow model, and we've looked at it on a market cap basis and on a price basis. And it does suggest that the next peak is really like crazy high away for Bitcoin. Like, I've seen numbers which seem pretty real for like 250, 280 grand, 250,000, 280,000.
Yeah, the total market cap of Bitcoin is still like 150, 160 billion, which is like the size of a decent, mega cap stock. I think that's around the size of Tesla, if I'm not mistaken. And then, other than the big four cryptos, which at the moment are Bitcoin, Ethereum, Tether, which is basically just a dollar replacement, and XRP, the market cap of every other coin, which is hundreds of them combined, is only like $40 billion. So it's not going to take much money to move those up. And it's, again, not going to take much money to move Bitcoin up, considering that's where the whales go. The whales buy Bitcoin, and they're starting to buy Ethereum. So everything really has so much room to go up in the crypto market at this point. And a lot can happen in 6 months. April through June of last year, we saw Bitcoin go from, I think, 3,000 or 4,000 up to 14,000 in just like a couple months. So $50,000 from here, it sounds like a lot, but for Bitcoin, it's happened several times before, just within the past few years.
Yeah, and for those who have not followed us, we think that Bitcoin is going to extract a great deal of its market cap from gold, which is
Right.
still worth about 4 trillion, and we think that that's going to collapse over time, and that market cap is going to shift to. And Ethereum will extract it from banks, insurance companies, where they are going to replace them, and there's going to be a wipeout there, which explains one reason why I believe Berkshire Hathaway, is struggling so much, because that's essentially an insurance bank proxy.
Right. That's the perfect example of an America 1.0 company.
That's right, 100%. All right, we're getting along in terms of time. Let's move on. We are bullish, optimistic, positive on Bitcoin and crypto in general across the board. Let's do cannabis. News out of New Jersey and any number of states looking for full legalization, among other things.
Yeah. So, and even in May, there was a big pickup in sales in some of the bigger markets, like the entire West Coast, Washington, Oregon, California, have all grown 30% or more over the past year. Oregon was actually over 50%. And those three states alone combined for over $500 million worth of cannabis sales in May. And of course, that doesn't even include Colorado, doesn't include Florida. Oklahoma is becoming a huge part of the marijuana market. They've only legalized it medically, and they've already sold over 500 million this year. So there's some really big markets coming in. And of course, New Jersey and New York would be two huge additions for that. I've seen a bunch of things this year suggesting that they really want to get marijuana legalized both medically and recreationally in those states, which would be a big boost in sales and be a big boost for the marijuana industry in general.
Yeah, and we can put up this chart of Canadian cannabis oil exports, which are just truly skyrocketing. And it just gives you an indication of the explosive growth that is here in the cannabis market. And thus far is, in our judgment, not reflected in the stocks. They've gone up a little, they've bottomed out, they've gone up a little. However, we believe that as what I've called the greatest recovery, given the sharpness of the move down, unfolds, you're going to see these stocks rocket up, completely rocket.
Yeah, for sure. And a year ago back, I just said California, Oregon, Washington grew so much in the past year, but marijuana stocks were, I think, like at least twice as high as they are now a year ago. So it doesn't really match what the market is actually doing. And at some point, the money is going to flow back into marijuana stocks. MJ is going to fly. Everything is going to go way up. And MJ is the ETF that I've recommended before. I still think it can double this year, which would be a more than, I think, 150% gain from here. But again, when these stocks start to go up, they're really going to move up fast. We saw signs of this already with Aurora Cannabis, which went up over 100% in just a couple days earlier, I think last month. And that kind of overflowed into some other smaller marijuana stocks that were basically priced for bankruptcy. But they're starting to move up off the bottom. I do think the bottom is in for MJ, for all of these pot stocks in general. And they really have nowhere to go long-term from here but up.
100%. And with that, we'll make that the final comment. All right, Ian, you can say bye first, and I'll say bye second.
All right, everybody. Happy Friday. Enjoy your weekend and stay safe.
And same. Happy Friday. Have a good weekend. And we'll have another Ian cast hopefully next week. Bye.